You are watching The Close on BNN Bloomberg. We are watching shares of Shopify under pressure. It's a record drop for the stock if we close at these levels, and really investors flinching at the forecast, because when you look at the results that they delivered, yes, there was a loss in the quarter related to its logistics divestment, but sales growth higher than expected, the value of goods on its platform higher than expected. Its forecast, though, is where things start to get a little bit murky. They're still calling for growth, but their forecast implies maybe a deceleration in that growth profile. They're also going to be spending. And so that means you're going to see a little bit of a contraction in margins. So with that, you saw the stock down about 20%, which begs the question, should we buy the dips? To answer that in debate form, we've got David Traynor, founder and CEO of New Constructs, and Tyler Radke, senior equity research analyst at Citi. And Tyler, we'll start with you. You're the bull. You've got to buy on the stock. What's your defense here?
Yeah, our defense, I think you laid out the framework of the quarter and the guide well. Our view is that this is temporary, right? The things that you're seeing on the investment side, we believe these are going to generate high returns in terms of new merchants joining the platform, including some of the larger merchants that are really going to accelerate share gains for Shopify. I think specifically as you look at the second quarter, there's a couple really unusual circumstances that are negatively impacting that growth. First, they're not going to get the full benefits of the recent price increase. And your point on lapping the deliverer divestiture, that is still a drag on numbers. So once you get beyond the second quarter, you're actually going to see revenue growth reaccelerate. I think you'll see margins expand a bit more. And then as you get into next year, that's when you really start to see the returns on these investments the company's making. So overall, we think this is a great buying opportunity for investors that have a bit more patience. If you look at things like GMV growth, which you referenced earlier, that was basically at a record high since the pandemic. So clearly, they're not seeing the macro impacts. I think there was just a bit of a expectations miss here, and the near-term spending is a little bit higher, but ultimately we're confident that will translate into higher revenue and profitability over time.
David, pick up on the points that some of the issues they're facing are temporary and that their forecasts, are really only disappointing in light of expectations.
Yeah, I think we have to sort of reframe how we define expectations and take into account what the stock price implies in terms of future cash flows, right? So for $66, you're talking about 20% compounded annual revenue growth for 20 years while we're improving the returns on capital from 1% today to 1,000%. So, I think where investors can really get in trouble is in Wall Street talks about expectations. They say, oh, the earnings are here. And oftentimes Wall Street will lower the earnings expectation to a number that makes it easy for the company to beat. And everyone calls that a win. And I say you have to throw that out of the window and recognize what the stock price means in terms of cash flow expectations, because at the end of the day, free cash flow is what drives value. And the free cash flow expectations embedded in Shopify are extraordinarily high. So I don't really care about, anyone saying on the margin, if this can happen, this or that, it doesn't matter. The valuation is so far disconnected from fundamentals.
Even with the pullback, David?
The pullback. I don't think the stock gets attractive until you get into the single digits.
Oh my God.
$10, I think, is closer to fair value.
Tyler, pick up on those points. Maybe speak to how you value it. And I think it's a serious point that David brings up. The biggest knock I hear from investors on why, they might like the market, they might like the growth profile, but they always come to valuation. And maybe it's just like a tough beast to value. How do you think about that?
Yeah, so look, I would say historically that has been our contention with Shopify. We've covered this name for a while, and at the peak of the pandemic, we were very skeptical around its growth prospects. Frankly, around its valuation. Frankly, because they weren't giving you a lot of free cash flow. If you look at the right sizing of this company over the last year, you've seen a massive increase in that free cash flow. We're talking about a rule of 40 plus company, some of the best in class growth paired with really strong free cash flow expansion. I certainly acknowledge that over the next few quarters, that magnitude of free cash flow expansion is slowing. But as I look out at our estimates, you go 3-4 years out, we have this company doing over $3 in earnings and free cash flow per share, which, at these levels, you're paying, north of or right around 20 times that, which is basically a market multiple. So if you're willing to wait, we do believe that it can grow into its valuation.
What number are you using, Tyler, to assess the total addressable market for Shopify? How big is it?
Yeah, look, I think there's a lot of different ways you can look at this. I think the way that we get comfortable around the magnitude of the TAM, obviously, e-commerce is still in its early days of overall retail sales. So we're talking less than 20% penetration. I think that is structurally a market that is going to continue to grow faster than most markets across the economy. Then you look at Shopify's share within e-commerce, that continues to grow. So I think certainly this is a market measured in the hundreds of billions of dollars when you add on things like payments, even some new revenue streams for Shopify that they haven't even started charging for, like audiences, advertising, some of the international opportunity as those merchants go live. So we really don't think TAM is the issue. Certainly the debate now is around the magnitude of spending, as well as the revenue outlook. But again, I don't think this is an issue of TAM or anything related to competition.
No, I just wanted to get the sense of the size and scale of the opportunity in front and take that point back to David, because if you're talking about an opportunity that's, say, $250 billion in front of it, and Shopify, has a lead, you said, how are they going to be able to grow and grow and grow and grow? They have been, and they're just at the beginning of really reaching that huge multi-billion, hundreds of billions of dollars of opportunity. They're only making $8.5 billion in sales this year.
Yeah, no, I think that's a double-edged sword. I mean, look, the total addressable market for e-commerce is huge, but you invite a lot of competition when you talk about that market. And that's where I think things get really challenging for Shopify. What do they offer in terms of this online model selling service that is so unique that it's going to allow them to take any more share than they already have? It's a very commoditized business. What they do is not that special, and there's so many other ways that people can do it. Because at the end of the day, we're talking about, an online storefront, right? Is that so different these days from a brick and mortar storefront? It's arguably less valuable, because with a brick and mortar, you got a real spot on real earth. Whereas in the digital world, you could be a needle in a haystack. Just, so the storefront digitally.
I mean, if that were true, then Amazon wouldn't be worth as much as these department stores, right? It's about the nature of how people are shopping.
Oh, it absolutely is. And the reason Amazon has the valuation it has is because it owns so much of the digital space that everyone knows where it is. Whereas Shopify is sort of a back-end service, right? It's not a destination in of itself. And people, in fact, Amazon is one of Shopify's bigger competitors because people can sell through Amazon maybe even more easily than they could through Shopify. There are dozens of services that do what Shopify does. And I would contest the cash flow numbers. When we run through our models for free cash flow, I'm showing very little free cash flow. In fact, it's a negative free cash flow if you're looking at the last couple of years. I mean, there was a negative $2.8 billion in 2022, but we show in the trailing 12 months, $170 million in free cash flow. It's 0% or less than 1% of their enterprise value. This business is not as profitable as people think, and its ability to get more profitable is going to be very difficult in the face of all the competition I just talked about.
Tyler, I'll give you the last word. I don't know if you want to pick up on the cash flow point, but I'd also like you to address the issue of moat and how easy it is to knock Shopify down.
Yeah, well, so what I would certainly agree that historically Shopify has not been a very profitable company, but obviously stocks are valued based on what we think they can deliver in the future. So you look at the trajectory of spending, again, even with this increase in spending here next quarter, it's not coming from fixed costs. It's coming from high payback period marketing costs. Employee headcount is staying pretty flat. So it's showing that this company can deliver really strong growth, 30% adjusted growth on relatively flat headcount. In terms of competition, look, we've seen a lot of companies come and go in this space. Shopify continues to gain and accelerate market share. We cover Salesforce.com, we cover Adobe. Their commerce businesses are growing in the single digits. Shopify obviously growing, between 20 to 30%. So we certainly haven't seen that. It's obviously something to keep an eye out for, but we really do think that Shopify has created its own ecosystem. We think there's a lot of levers they still have to unlock incremental monetization streams over time. And we finally think they're in the right place of being able to do this profitably.